Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hello, everyone, and welcome to the RIA Edge Podcast. I'm David Armstrong, the editor of wealthmanagement.com. This is, as you know, the podcast where we speak to principals of RIA firms about their growth strategies, how they design their firms, some of the constraints that they encounter with growth, and the opportunities that they see. So today, I'm thrilled to be speaking to Howard Morin, who is the founder and partner at Helium Financial Group and Helium Advisors, a $270 million AUM firm in Seattle. Howard, thanks very much for joining us.
Thank you. Most welcome, David. This is great.
So for the folks who don't know you, can you just maybe give us first the introduction to Helium Advisors, where you sit in the world? I know you take a very tax-centric approach to wealth management. Tell us a little bit more about your firm and the clients that you serve.
Yeah, that's absolutely correct. So Helium Advisors, we started early 2016, and literally in true Seattle fashion, a couple of us left an existing firm where we were running a broker-dealer, RIA, a couple of tax practices, and with some great support from a couple of well-known large custodians, we set up Helium early in 2016, and literally before we even had an office, we ran it out of the back of a conference space in the corner of a Starbucks in Kirkland, Washington. So we did that for a little while and just, figured out, what do we want to have in a business and what do we need to do? And we started organically with a new RIA, which was Helium Advisors at the time, and a new tax practice simply called Helium Tax. And that was essentially the foundation. And then over time, through a lot of organic growth and some M&A, we built it into what it is today on the advisory side, the family office side, and now we're up to 5 tax practices.
5 tax practices. That's impressive. You launched as a tax-centric firm. I think some of you come out of the tax world, and tax is very important to what you bring to clients. And I think a lot of advisors are discovering that, right? And they're starting to bring more tax planning into under the roof, so to speak. But explain to me a little bit about that. Where do you see the advantage of being a tax-centric firm and particularly launching as a tax-centric firm as opposed to trying to launch a RIA and then find the tax resources either as a partnership or in bringing it in-house?
Sure. I think part of the advantage, and I'll compare and contrast what works and what's challenging, is doing it from the start as a tax-centric group, both in the wealth management side of things as well as tax, gives you a bit of a head start ideologically as a firm, right? With regards to your DNA and what you represent both to your own team, which is very important. Your people are everything, but also to the clients, right? Trying to do it 5-10 years down the road, and either you're a tax group or a big CPA firm trying to start up advisory services in the wealth management space, or you're a wealth manager before you've been rolled up by a giant PE shop and you're saying, hey, we should bring some tax folks in-house. That's quite a quandary. And I think if you just going through a couple of your podcasts, one of the biggest challenges with organic growth is it's organic and it takes time. But also, the counter to that is, M&A, you have the challenges and the disruption of integration. It's no different trying to meld the combination of having a tax-centric practice from the start and dealing with the organic growth of that, or you're going to get into the integration and the potential ideological challenges doing it down the road, because obviously the mindset, oftentimes, not all the time, the mindset in the wealth management or capital markets, family office world may be completely different than the mindset in the tax accounting, bookkeeping, public accounting world.
Yeah, for sure. And we hear all the time about the tax alpha that can be brought to clients, and certainly a little bit more importance often than sometimes the basis points that you can get from tilting a portfolio towards a factor or whatever. Tax is important. Can I ask, when your clients approach you or when you're marketing yourself for this organic growth that you've had, do you lead with tax? Do you lead with wealth management? How do you present yourself to prospects?
That's a great question. And I would say early on, we had a lot of people we were already working with from our past lives, right? Whether it's family, friends, you start looking at the different circles and you build this reputation of just doing a great job, really caring about the client. And then also the realization that all of these clients have to pay taxes or have to do some sort of tax planning. And if it wasn't us, rarely would somebody say, hey, I don't have somebody to go to for my tax planning or tax prep. That kind of led us to that path or very early on, even prior to Helium. At the same time, me and my partner, Gary Russell, neither one of us is a CPA, right? We're traditionally, financial advisors, engineers, financial gearheads. And we figured out pretty early that you've got to run this side of the practice like a professional services firm. And frankly, this may seem kind of trite and simplistic, but we didn't really have a preference when we were starting which door the client came from. Did they come from the tax door or the wealth management door? Because, at some point, our hope in our model was that we would use, essentially the value-added services of the firm in its entirety, both tax and wealth, to handle that client. So a lot of the tax clients that came to us for tax were like, here's what I'm doing on my retirement or money management. Can you help me? The answer is yes, likely. And we had clients that came in from the wealth management side or the retirement side or, whatever they were doing in high tech, and they had RSUs and things, and said, man, I'm making money in my portfolio, but I'm getting killed in taxes. You guys know any good tax people? That was a really simple model from the start.
And it strikes me that a lot of the firms that do try to get into tax planning as they mature are doing so in a way that, it makes sense. It's a way to kind of source clients, right? It's as much as it is providing a service, it's a way to bring clients in the door. You're doing this from the beginning. And do you think, I don't know how you would even characterize this if you do, the growth that you've had, the trajectory that you've had, I guess, is the Helium part in the tax or the wealth management? In other words, what's the engine? Obviously, it's the combination, but do you even make a distinction between the two at this point?
Kind of just a little bit of tongue in cheek. It would really probably depend on who you're asking the firm, but I'll give you my perspective. We always felt, at least at the partnership level when we started, that this is a challenge that is consistent with almost all of our clients. It's rare that a client had nothing to do with wealth management or retirement assets or accumulation and didn't consider tax in some way. In a lot of our clients that we had on the tax side, they would show up and, turn over, 10 different brokerage statements, K1s, and there was really no plan, right? There was, and I guess maybe one of the easiest ways I tell a lot of stories too, and I really admired the podcast with Jonathan Foster and the storytelling, right? I use a lot of analogies and food and simple things. And we saw a lot of clients, and I think this was his phrase. We had a lot of clients that were living these first-class lifestyles, but their portfolio and taxation was definitely running in coach or, deep economy, right? Mm-hmm. So just getting them to some sort of, equalization of par, right? Just figuring out where the deficiencies were and trying to explain to them what they were doing, really assess that and identify how we could help get them to at least par, and then really talk about how to excel both on the tax and the wealth planning side.
So the tax exposures can influence the investment.
Absolutely. Absolutely. And vice versa.
You obviously, taking the approach you do requires a bit more maybe bespoke handling of each client individually. And I think some advisors sometimes struggle with the efficiencies there. How do you grow when you have additional services that you're bringing to a client? That obviously takes more time, more resources. It's difficult to balance the resources available with the growth if you're trying to do bespoke portfolios and tax preparation for each client. Do you think about that at all as you're plotting the growth trajectory of your firm, that balance between efficiency and personalization?
Yeah, that's actually, I think that's an area that a lot of firms much bigger than our own have run into that they frankly didn't plan for. One of the other things we've done for a long time at Helium since we started was we've spent a lot of time not only building and growing our own firm, but using our firm as a kind of test case for a lot of other well-known firms that I can't get into right now, both on the public accounting side as well as on the wealth management side, because they were trying to do this. They were trying to do just this. They were either really large in wealth management or really large in public accounting, but they couldn't figure out how to integrate the two. So we spent, years, basically saying, oh, here's how we do this. Here's how we blueprint it at a small, call it, small batch level, right? Because things don't always scale really well. And I think one of the key takeaways from being able to scale and offer value-added services like tax planning and the like is you've got to understand or identify processes, right, that are fairly easy to understand and easy to implement, right? Think of, let's say we have a new tech stack. You and me set up a new firm. We bring in new software and it's very difficult to understand, very difficult to use. The adoption rate's going to be close to zero and we're just paying a monthly subscription. If a larger firm, whether it's in wealth or tax, was going to take on this new, call it value-added service, they have to define and come up with a process that is easy to understand, right? How do you introduce one to the other, right? Who's responsible for what? How do the economics work? Who is really handling the client? Things like that. And I think a lot of those things kind of get passed over as just, attention, little details, but those little details play a big role.
Sure. And it's the business process as much as it is the technology stack. Right?
Absolutely.
And getting those processes down. Can you reflect a little bit on you said minimal M&A, and I think you're maybe speaking about some of the tax firms that you brought in-house. Mm-hmm. Any thoughts or desires or thinking about M&A with another advisory firm?
Definitely. And we dabble in that now. We've made a couple of public announcements on the family office side earlier this year. I think we always look at all the options on the table, right? And whether those options are, our need, somebody else's need, capital markets. Obviously, we have a lot going on right now in cost of capital, interest rates, things like that. Mm-hmm. So we're always, we always have our eyes open, but not necessarily married into one particular growth strategy. I think the market oftentimes tells you what you can do or need to do. It sounds maybe a bit reactionary, but if we're going to grow, we need to grow in a way that we can measure, we can understand, and we can execute upon.
How many employees at Helium now?
If we include tax and wealth management, I think we're right around 40s, mid 40s.
Mm-hmm. And I think I saw on your form maybe over 800 client accounts. So that's about a right average. Do you what kind of metrics do you look at on a dashboard to think, okay, maybe we need to actually slow down on the client acquisition because we don't have the resources? Or do you think, oh, looks like we have a little bit of extra space over here. We can put the accelerator down a little bit and maybe rev up some of the marketing. Do you think about that at all in a deliberate manner?
Absolutely. And, some of this comes back to, I would say, whether we think about New Year's resolutions or house cleaning, is go back in and, everything is metric or data driven these days. And without getting into a whole diatribe on AI, there's a lot of things you can figure out just by looking at your custodial reports and, things like Orion and so on. But one of the things that I caught, and I feel like we feel the same way when we're marching to it, was I think you had Craig Robson on talking about, this bringing more value and a higher employee to client ratio. I love that, right? That's not something that we ever just simply pegged, right? Beyond your typical RIA metrics that you would see in a Schwab or a Fidelity RIA benchmark. But I really like the concept of the employee to client ratio. And I think we've always tried to march to that path. Maybe we never called it that, but long ago when, Gary and I, who started the firm, we were both at LPL for a little while in a past life. And we were, admirers of Ron Carson pretty early, right? And Ron came out with one of his early books, Tested in the Trenches, and he talked about love affair marketing. And he basically said, control what you can control. You can't control the markets. You can't control the rates. You can't control what's happening in people's lives. You can control how you treat them, how you service them. And I think even one of your guests said something that, it's so awkward to ask for referrals and things like that. And we agree, right? If you're doing a great job, whether it's through, you've got a great team and you've got a few employees to each client, or you have 3 employees to each client, ultimately what you're doing for each of those clients is probably the metric you really need to pay attention to.
RIA Edge West is designed to provide solutions for the most complex pay, personnel, and growth challenges that RIA leaders grapple with every single day. The event will start on October 7th with a new Tech for Growth Summit that will help elite advisors leverage technology to unlock business growth and create scalable, repeatable, yet personalized experiences for your clients. Join us October 7th through 9th in California. For more information or to register, visit informaconnect.com/RIA Edge West.
You talk about active in the family office space, services there. We think of family office as, obviously investment, tax, all the basics, also a little bit of hand-holding in maybe more unique situations. Talk to me a little bit about your philosophy around family office services and what you offer there and where you see maybe potential for growth or, what you're looking at.
Yeah, I think the family office is we're talking multifamily office is such a broad and, I think, in my personal opinion, a fairly ambiguous term, right? If you ask 10 of us, and I think even Craig mentioned it, Craig Robson, and said, we're not interested. I think it was Craig that said, we're not interested in picking up anyone's laundry. Second us on that as well. So we define that as really the intersection for a high net worth client of, wealth management, obviously planning, estate planning, tax planning, but also, really looking at giving them advice on something that maybe we don't look at every day. Maybe they're looking at M&A. Maybe they're looking at making a major employment decision or something going on in the family. And, I think we have structures for that are well beyond your typical, here's what we're charging every quarter for AUM. We have these, consulting agreements and other things that we do, whether we bundle the whole thing up and call it one type of agreement of the services that Helium provides that are all encompassing more of the family office approach. And that may be a flat fee or maybe based on some other metric, but we don't try to get too rigid with where we take things on the family office side. But what we're realizing is a lot of these folks that are our clients in the family office space, we could be the best stock pickers in the world. We could be the best accountants in the world, the best CPAs in the world. But the main economic driver is really the client, right? Whatever they do to put them into the tier, if you will, of, high net worth, ultra high net worth, whether they're an employee in tech or a physician or an attorney or, real estate mogul, whatever they do, it's likely to be the best economic engine they have. And we'd like to feel like we're close behind that in support of that economic engine.
It makes sense. I imagine that a lot of the clients are entrepreneurs and business owners, in which case there's an entire world of business finance or business consulting that I imagine you bring to the table.
Yeah, and we're absolutely, that's been a lot of our history, and it's an area that I would encourage everyone to keep an eye on.
Are we getting some news here?
We're working on it.
That's great. One of the things I was struck by on your website, and I don't think I've ever seen this before within RIA, is that you have a board of advisors who come from not the finance world. Maybe they're clients, maybe not. I don't know. But you put them on the website. Your board of advisors. What's behind that? What does the board of advisors give you? How do you use them? And what's the thinking behind highlighting them on the Helium website?
Yeah, that's a great question. So the board of advisors is first and foremost, it's a fluid, I would say it's a fluid list of people that can bring some additional value to the firm in a sense of just being our, call it external, hopefully incredibly objective mastermind team, right? Whether they're coming from different fields, different backgrounds, whether it's science, engineering, consulting, behavior, it is our opinion that, people don't really change that much, right? The services we all provide in this industry, we're dealing with money. Money is something that is very emotions driven. And obviously a lot of times, we play so many different roles, and I'm sure you've interviewed a lot of people that can tell you the same thing I'll tell you, which is, we spend half of our careers, I think, in this space in behavioral finance, right? Mm-hmm. Trying to calm people down or help the family out, or, tell them that maybe this isn't the best deal for them to take, or so on and so forth. So the concept behind the board of advisors is just that. It is an outside, it may be a client, it may not be a client, outside group that we're looking to, constantly evolve and expand, that can provide some guidance and some objectivity to, hey guys, have you thought about this, right? Ask those real provocative questions that lead to, the betterment or improvement of the firm, and hopefully more value add and insight to our end client.
Is it a ad hoc sort of meetings, or do you formalize it in some way? And I think we see some advisors that if they do use a board of advisors, they're all over the map in how they structure it. How do you structure your relationship with your board?
I would say right now it's probably more of the latter. I would say early on when we started, it was a little bit more rigid, regimented. We're going to meet, the third Thursday of every quarter, that sort of thing. Right now, we're going through this evolution, and it kind of goes back to stay tuned, where we're basically, we're constantly going through this evolution, right? Of plan, execute, assess, plan, execute, assess, right? So as part of that evolutionary process, I would say the board of advisors is encompassed in that process.
Okay. Tax, investment, and maybe before I get to the next question, I'll ask you a little bit about the investment side. We're, custody with Fidelity, I think, as a partner of yours, a little bit of Schwab. Talk to me about the investment process that you bring clients through. Obviously, through the taxation lens, yes. But then where do you go? How do you construct portfolios? What's the value prop there?
Yeah, so I would say a lot of times we start with an overall plan. So we almost take a step back from tax, from portfolios, and really look at what's the game plan? What are we doing, right? What is the objective of the client, right? And if you simply look at the world as, all of us, for the most part, have clients that are either in the accumulation or the distribution phase of their lives, right? And then you think of supersets and subsets. So we tend to look at it that way from a planning perspective. And depending on essentially which half of the world we're looking at, and sometimes there's a hybrid to that, we want to start with a plan overall that encompasses, income, expenses, taxation, current investments. And then frankly, we try to use more of a very consistent process or approach that is, call it models based. There's a lot of specificity if the client is in one particular industry or another, right? Whether they're overweighted in real estate or, being in the Northwest, we have a lot of history in high tech and a lot of concentrated securities. So we need to be mindful of that. And then we have people that retire from some of those companies in concentrated securities. So we're always managing, trading windows, hedging, things like that. But I would say at its core, our investment process starts with the objective of the client or objective of, the family, right? Because the client can sometimes be more than just mom and dad, right? It can be, generation above, generation below. So, planning is very, very core to our process. And that's kind of the centric process that we start with is, what are we doing, right? What are the current concerns? We'll go back and look at taxes for a couple of years and figure out, okay, what's worked, what hasn't worked, and then make sure that we're all on the same page, both as an investment team, the advisor, because we separate out, we've got the advisory, call it partner or representative with the family of the client. Then we have some associates, an ops team, and then there's an investment committee and, essentially an investment team. But you also have the tax side of the house, right? And you might have a tax partner, CPA, and then maybe a, accounting associate. So there's typically a lot of touch in these relationships, but it's got to start with an overall plan, much like you're building a house or a building, right? Trying to build a house without a set of plans is going to be pretty challenging, and you may not like the result.
I imagine that taking a tax-centric approach to the investments, in particular when you're taking high net worth family office, that there's some estate planning that comes into the picture, particularly multi-generational wealth, probably trust services. What's your approach there? Do you have a network of referrals for that? Do you bring some of that in-house? How do you think about trusts and estate planning?
Yeah, it's a great question. I would say, we full disclosure, we don't own any law firms yet, or don't necessarily have any near-term plans to own law firms and trust companies. So we tend to like the choice of best of breed. So we work very closely with folks in the estate planning side of things on the legal side, as well as some really deep relationships in the accounting world, in long-term, tax planning for clients. We'll even work with the client's existing counsel, both in tax and in legal. And I would say, we've kind of coined a phrase internally and with our clients, it's been well received for the last couple of years. A lot of these clients have a lot of different advisors, right? A lot of people in their ear or giving them guidance or, so on and so forth. But rarely have we run into, the average client in the high net worth space or ultra high net worth that has any idea what it all means, like together. And we like to call ourselves kind of the quarterback of advice, because at the end of the day, we're perfectly fine working with other advisors, working with other family offices in concert, working with other accounting firms and with other, with law firms. So I think when the client sees that we have this quote, I hate to once again go back to my tech roots of saying open architecture, an open platform. It truly is, right? From a willingness to solve a problem for a common client, we're going to use best of breed. So if it's not something that we can come up with or we have, we'll go to one of our partners and engage with them on a particular client.
That's interesting. And, I'm wondering, as we've heard this from other RIAs too, that growing want that kind of open architecture in terms of service providers, the ability to bring that to clients. And then others say, no, the game here is, share of wallet and, getting as much of that in-house as possible. And I imagine that there might be a point as you grow where it makes sense to do that kind of thing. Do you have thoughts about your next iteration? What that is there a point that you see getting to where it might make sense to bring a trust company in-house or adopt some kind of, bring a state attorney on board? I don't know what that would look like, but is that on the roadmap? And what do you think would be the trigger, whether it's size or whatever metric you might look at, which would provide, prompt something like that?
That's a fantastic question that for me personally in my career, both in wealth management as well as in tech, I spent 7 years at Intel, and we ran into this with our clients in financial services. What do you build? What do you buy? Right? Has always been the quandary. And there's pros and cons to doing both. I think given our current comfort zone of competency, we know what we do well. And I think we have a pretty good assessment of what we don't do as well. And where we don't do as well or as efficient, then, I think it makes sense to outsource and work, whether it's in tech and compliance and estate and legal, all of those things. And I think if we get to the point where we can deliver the same level of service, if not better, than the things we currently outsource just by sheer size or efficiency, then I think we really explore those decisions at that time. Right now, given that we're not the size of IBM or Citibank or Citigroup or Goldman Sachs, and everyone's doing, have various roles, we're going to focus on our core competency because we think doing something else other than that is really going to potentially dilute our ability to execute on behalf of the client.
Bringing tax into the financial planning process, I imagine there's a technology component to this. And how happy are you with your tech stack? What's missing, and what can you tell us about it? Do you integrate the stuff, the tax prep with the financial planning pretty seamlessly? Do you use some vendors with that? What does the technology component of your firm look like?
Yeah, I think, it's probably not going to surprise anyone, at least on the RIA side, that, I think if we go back a second, right, I was at UBS in wealth management. I think one of your guests was at Merrill and left Merrill for reasons where, you couldn't use something other than something on the Merrill system, right? Or at UBS, kind of the same thing. When I was at Intel and we were talking to the Morgan Stanleys and the Merrill Lynches of the world, these monolithic organizations were so rigid in their technology. The fact that now in the RIA space, and it has been for years, there's been such a leveling of the playing field, right? From just whether it's CRM, it's planning, it's custodians, there's just such a leveling of the playing field to the point where I would say the independent advisory firm, RIA, even sole practitioner has such a technological advantage, I think, in my opinion, over your average wirehouse advisor. I think that's happening, or that's already happened. So beyond the red tails, the e-monies, the Dropbox, the Zoom, things like that, the Y charts. I mean, we have a very similar tech stack that works really well together, right? Through the typical integration, APIs, that sort of thing. What we haven't seen yet, if we just take the tax world or the accounting world in isolation, you literally have, essentially 3 silos in the tax and accounting space. You've got the client relationship management, right? So on the wealth management side, we look at it as Salesforce. We look at it as a red tail. There's really not a similar type of structure offered in the tax space like an RIA has, from top to bottom. You really have only 3 or 4 at best gigantic enterprise level choices of tax software. Still a bit clunky, doesn't really play well in the cloud. Super expensive, so I would say the tax and accounting world like the evolution of the RIA space, has not caught up in the tech stack per se. Now, I wish we had perfect integration between, all of the data, the information, the returns, and the overall financial plan. It's gotten a lot better with the ability to read and scan returns and things like that, and then use some AI and, some data query. But we're not in a perfect world or even close to it with the integration of, call it tax and accounting and wealth management. But I feel like the RIA side is clearly at an advantage. And I think this is a mega trend that's happening in the tax and accounting space, especially right now. We're a couple of days out of, April 15th. And I would tell you that, there are a lot of smaller firms and smaller practitioners in tax that are really struggling with technology and efficiencies that the RIA world doesn't have, even if it's a small RIA.
Sure, that makes a lot of sense. And I imagine the integration of the two is makes it even a little trickier. Do you think that and this, I don't want this to be a leading question, but do you think that the lack of solidly integrated technology on the tax side into the wealth management space is a constraint on your growth? And if someone solved that problem, would that be an accelerant?
Maybe and yes.
Okay.
So maybe on the first half, yes, on the second half. This is you run into, it's really a great question. And I think I spent a lot of time having these conversations with not only my partners in the firm, but also a lot of other folks at very, very large public accounting firms, very, very large wealth management firms. And there is no easy way, think of, these are kind of tectonic problems, right? Think of the Atlantic Ocean and the Pacific Ocean. They're worlds apart until they meet, right? Somewhere at the south end of a continent, right? We're not even close. We're not even close to the that meeting point at this point. I mean, in my opinion, right? Being a little bit of a technical gearhead and somebody who is an operator and practitioner.
We're not even close to those two worlds integrating.
Not in my opinion, no. Unless you're, unless a firm is so big, think of like a bulge bracket Wall Street firm, or call it top 5, maybe top 10 public accounting firm or law firm, just has, an overwhelming IT staff. And the way I used to look at the world at Intel is, if these weren't banks and brokerage firms, they'd be some of the biggest software companies in the world. So if you have such a large IT staff where you can just engineer things and have developers and armies of developers create these, these solutions through blunt force trauma, go for it, right? But the product you're going to end up with is probably not anywhere near as good or as efficient as what we have today in the RIA space from a tech stack option, where you can just subscribe for a monthly fee on a credit card, and then also in the tax space. Most of, frankly, and maybe I don't, add a ton of friends on Twitter for saying this, but I would say the majority of people that are tax practitioners, even at an enterprise level, are not really thrilled with their tech stack. They're not thrilled with the software offerings. A lot of these, major enterprise, multi-billion-dollar software companies on the tax side, it's been the same technology since the late 80s, right? And all it is a 2023 update, 2024 update. The UI, the feel, a lot of the same challenges, the clunkiness, and the closed-end nature of that proprietary system has been the same thing for decades, where we have seen evolution in wealth management. We've seen evolution in capital markets. And I think some of that is due to ideology and necessity.
Yeah, it makes sense. Do you, final question here, and I'll just, we used to think of the wirehouse world where you were for a while at UBS, the separately managed account as being the tax efficient way to approach investment, because it allows for the bespoke kind of nature, tax loss harvesting and whatnot. Direct indexing, some of the technology there has brought that, I think, given that a wider berth of potential use. How do you guys think about direct indexing? Does it have a role in your firm, or is that for maybe smaller clients that you don't deal with? Is direct indexing anything that's on your radar at all?
Absolutely, it is. And we had some relationships and some clients in some previous platforms that I believe were acquired. So without getting into names and specificity and all of that, and for the clients that were really interested in direct indexing for whatever reason, right? Whether it was for ESG reasons, tax efficiency, whatever it was, risk management, really seemed to like it. A lot of people, I think at some point you have to, and granted, this is dependent on size of your enterprise, you have to decide how many options you want to provide when it comes to the car color, right? I think that, the Henry Ford efficiency of any color you want, as long as it's black, right? Look at Southwest Airlines. you can fly any plane you want as long as it's a 737, right? So there are some major advantages to standardization. And then when you start getting to variants, if you're trying to scale, those variants create occurrences that create exceptions. And as any operator knows, when things are running smoothly, everything works according to plan, from your Excel spreadsheets and your PowerPoints. It's the exceptions that take time. So every time you add another variable or variation to either your platform, your choices, SMA, custodians, is one additional area that is potentially one of those variables that you will run into. Maybe a long-winded, muddy answer, but I think it's just the jury's, for us, we're obviously have some interest. We've explored it in the past. We've used some of it in the past, but I think, in my opinion, jury's still out if we're purely looking at it for a tax play.
Mm-hmm. Yeah, no, that makes a lot of sense. I could go on forever here, Howard, but I'm getting the hook from our producers. So this has been great. Great conversation with you. A great introduction to the firm. I really appreciate it. And it sounds like we might hear some news from you in the not so distant future.
We're working on it, David. This has been my pleasure, and always happy to do any follow up or anything you guys need or want some further clarity. Always happy to hop on a call or provide additional insight or introductions. But yeah, this is my pleasure, and I appreciate the opportunity.
Well, thanks very much. Howard Morin, founder and partner at Helium Financial Group and Helium Advisors. And this has been the RIA Edge Podcast. Thank you for listening. Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.